Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Friday, October 21st, and today we saw the markets go up sharply. The S&P 500 was up 2.37%, the Dow Jones was up 2.47%, and the NASDAQ was up 2.31%. So overall, across the board, we were pretty sharply in the green. And this came following remarks at a Fed meeting, or at a meeting in San Francisco at the Reserve. President there, Mary Daly, said that the U.S. Central Bank should avoid tipping the economy into an unforced downturn, and that it was time to consider easing the pace of hikes. Now that's big news, because in history we had never seen a 75 basis point rate hike. We had never seen that back to back, and we've gotten that back to back, expected in November. And after that, now we're starting to get this conversation of the Fed wanting to ease the rate of hikes. So they're still going to be raising interest rates, but at a slower pace. And ultimately what that should mean is that eventually they will cease rate hikes altogether. So maybe they do in December a 50 basis point rate hike, and maybe they do that for 1 or 2 months. And then they would do a 25 basis point rate hike, and maybe they do that for 1 or 2 months. And then they would probably just keep rates where they were until they were satisfied with where inflation was at or heading. And then maybe they would start cutting rates at that point, but that would be deep into 2023 or early 2024, depending on what we see in the CPI, in the labor market, all that, a lot of variables there. So, but this is good news for long-term investors. Obviously, if you keep investing through this downturn, at least now the Federal Reserve is starting to talk about easing eventually in the future, and that could lead to more positive results from the markets. Obviously, they've been hammered, and a big reason why is because of the pace at which rates are increasing in the United States. So that was big news today. And then even though the past 2 days have been red in the markets, we actually closed the week sharply higher, and it was the best week since June in that little rally that we had. So let's take a look at the charts. So this is the S&P 500, and I mentioned on Wednesday that when we got this candle right here on Wednesday that my cursor's over, that whenever we closed either above this wick or below this wick, it would be pretty significant. And on Thursday, we basically closed at the bottom, and so we almost got there, but we closed at the bottom, and now we've closed above, and we've also closed above this zone. So technically speaking, this could indicate that we're headed back to maybe the 38.90 level in the S&P 500. That zone that's been on the market for quite a while goes from 38.90 to 39.80. So a little bit of a 90-point range there on the S&P 500 that we could be met with some selling if that's the next place that the market is headed. And then after that, obviously, we have this trend line, and I will bring up the 200-day moving average because that will act as a point of resistance, and it'll be quite significant when we break through the 200 moving average. We've talked about why that is in some of the weekly wrap episodes, but that is something that I'd be looking at too, because if this crosses below this zone up here, or say we get up here, right, we're up here, the trend line's up here, but maybe that moving average is somewhere in here, and so we get above that zone, we hit this, and then we could go back down if that were to happen. So that's what I'm looking at on the S&P 500. If we take a look at Bitcoin, it's actually showing relative weakness compared to the market, which is, or the stock market rather, which is what we expected. after we broke through this trend line but remained in a pretty bearish downtrend on the S&P 500. We felt like there wasn't enough to push this up and really have strength, even though it broke through this trend line that's been on the chart for a year. And now we're putting pressure on the top of this zone again, and we're still waiting to see what will happen with the 17.5 to 17.7 level. I will continue to say it every day until something changes, but if we break through this zone down here, the next level for Bitcoin is probably between $9,000 and $12,000. And if you take a look at this chart, even you have a high, a lower high, a lower high, a lower high. And we're just really, really putting pressure on this resistance, or on this support rather. And that could prove to be pretty explosive if we break through it. And that's what I think could send us all the way back down to that level, in addition to there not being any sort of supports or any kind of structure in the price until you get to that level. So that's what I'm looking at on Bitcoin. We closed the week sharply higher on the markets. I believe Bitcoin was pretty much flat. Again, it's been showing weakness since it broke through that trend line. But if you like this type of content, please subscribe on YouTube and follow us wherever you listen to the podcast. I release one of these episodes every single day that the market is open, and I will be releasing another episode of the weekly show this weekend, hopefully tomorrow. And that just goes more in depth, and we hit on a bunch of other topics besides just what happened during the day or during the week. So be sure to stay tuned for that. I appreciate everyone who is watching or listening to this episode, and until next time, thank you for listening.